A very good morning. It's Tuesday. Time to bring you Managing Your Money, which is brought to you by Money Sense, Singapore's national financial education program. We're joined in the studio once again by Roger Tan from the Securities Investors Association of Singapore. And we will try and continue our topic we had about 2 weeks ago on the issue of REITs. But first, Roger, we'd like an update on the economic situation, if you don't mind.
Well, I don't mind, but if you're looking at the current economic conditions, the signs are still pointing up to a more positive 2010, though how positive it's going to be is the biggest question mark right at this point in time. So you're seeing that in the volatility that we saw in January, and then a bit of recovery back in first part of February, and then the volatility coming back again. So the markets are unsure what is happening. They've priced in a lot of the recovery story back in 2009, and at this point in time, they're reconsidering whether they have overpriced the situation, or have they? Is there more leeway to go in terms of the upside gain in markets?
So we have to preface this, and this is the world economic situation. Now, Asia has more or less come to a state where we are recovering and quite well. Yeah. And for this man in the street in Singapore, should I save, should I spend, or should I invest?
Right. Well, if you start saving, you will always have a buffer to start investing. If you save at current interest rate condition, you're not going to get a lot from your returns or from the interest rates. So to a certain extent, you would have to consider to invest. How much to invest is a question of exploring your financial situation, your risk budget on top of your risk aversion, and so on. So to answer that question, you need some amount of cash to maintain your liquidity needs, but at the same time, whatever is this excess from that, you can consider to invest.
Okay, so is there this current pent-up need for people to spend their money because they were so prudent during this economic crisis, and there are a lot of investment vehicles out there these days?
If you're talking about spending, there's always no lack of good stuff out there to buy. But going back to being more prudent for your retirement, for your future needs, to improve your future living standards, it's always good to put aside some money and hopefully invest it properly so that it's producing some good income that enhances your income as you grow older.
669-11938 is our number. If you have questions for Roger this morning, I believe we would like to. If you have a question on REITs and how they work, you can always put that to Roger. Or if you have a general question as where you should put your money. Let's bring the topic back to the REITs issue, where we were talking, what we were talking about 2 weeks ago before Chinese New Year. What's the state of S-REITs in Singapore these days?
Well, S-REIT has gone through a good correction back in 2008, and to a certain extent, it has come back, part of it, 2009. Yields continue to show that they are pretty good in most of the S-REITs in Singapore, and that they're pretty stable investments. And some investors have actually said, it's something that I missed and have been going back in. A lot of REITs that has been trading at half their price. For example, Suntec REIT that has gone down from $1.50, $1.60 all the way down to 80 cents, have now recovered back to about 1.30. Capital Mall Trust has gone back up to about $1.80 plus cents from $2.40. Came down all the way to 1.20. So a lot of these REITs has been recovering, but not back to its highest peak. No. So there are opportunities still in the REITs market, but like any property investments, it's not you buy tomorrow, hope you sell the day after or even the same day. So it's a long-term allocation in your portfolio, and it gives you some form of income as you invest in this kind of investments.
Has the REIT proved to be a popular investment vehicle for perhaps the normal man in the street?
Well, popularity, definitely. I've been getting more and more questions whenever I run a seminar about REITs. When it first started back in the early 2000s, not many people understand what it was. But then subsequently, within 1 or 2 years, they realized that, it makes a lot of sense when the REITs are giving you 5 to 6% returns and interest rates are giving you a lot less. Then it started picking up, and because investors still didn't really understand what REITs were about, they started pushing REITs beyond its fair value. I've never seen REITs priced on growth prospect before. It's the newest thing that I ever seen when I was looking at REITs.
Only in Singapore.
So far, only in Singapore that I see that. So you get good REITs selling at sky high prices and giving a yield around 1+ to 2%. I wouldn't say which one at this point in time, but
do your research, as we always say.
So it has gone through a phase of where investors have explored the product and now start understanding it a bit more. But there's still a few misconceptions, like it is an equity. No, it's not an equity. It's traded like an equity, but you're actually buying the underlying assets, the real estate. So, like any real estate investment, it's really a long-term investment. It's not a short-term investment, and the yields coming from the property itself, and not at a dividend level, is more important actually. And the quality of assets. These are questions that people are not asking. They're asking whether, if I put my money in today, within a year, it's going to be, at least within a year, I'm going to get 20 to 30% increase in the capital increment. It doesn't work that way.
Okay, 669-11938 is our number. If you have questions for Roger, you can always call in to our program, which is Managing Your Money, brought to you by Money Sense, Singapore's national financial education program. And of course, if you want to find out more about Money Sense, why don't you just log on to www.moneysense.gov.sg. Managing Your Money will continue